Hello guys, it's Drew here with Invest Together, and today we are going to be talking about the highest valued SPAC merging company of 2021. The company that we're going to be speaking about today is a blank check company that goes by the name of Gores Holding, GHIV, and they're going to be merging with a very successful mortgage company called United Wholesale Mortgage. Now, before we go any further, I do need to put out the notice that I am not a financial advisor, so please do not trust anything that I say or tell you about a given stock or investment. Always do your own due diligence and understand the investment that you are making and the company that you are buying into. Now, with all that being said, let's invest together into the biggest SPAC of 2021. Now, one of the first things that I like to do when I'm doing due diligence on a SPAC company is I like to do due diligence on the company that they are merging with first, which in this case is Gores Holding. What I'd like to see is that they have already done blank check merges in the past, and I'd like to see how those companies have played out in the public market. Now, as we begin to look at Gores Holding, we'll start to see that they actually have had quite a few successful SPACs in the past. Some of these include Twinkie or Hostess brand back in 2016, which is now up over 44% since the initial merge date. You also have Vero Mobility, which came out in 2018, now up 35% since its debut, if you will. Also PAE, which is now just below 2%, which also came out in February of 2020, so more recent. And then their most recent one is something that you guys have probably heard of, Luminar Technologies, LAZR, which is now up over 200% since the merge date earlier in December. Now, one of the biggest reasons that I like to look at the past SPACs that this company's had is because I want to have confidence going into that merger date, knowing that I will see that ticker change over from GHIV to UWM under United Wholesale Mortgage. Now that we have the confidence in Gores Holdings and the past SPACs and mergers that they've had with other companies, it's important to dig deeper into the specific merger between Gores Holdings and United Wholesale Mortgage. Now, as we dig into this slide, we'll see that this set date for the merger is January 20th of 2021. That's in less than a week. Okay. Basically, what that means is all shareholders or stockholders will set up to vote on the merger to go through. And if that does go through, which it has in the past on the first try for all of Gores' previous SPACs, then we will essentially see that merge actually take place. Now, what happens when that merge takes place is we'll see a ticker change from GHIV to UWM under United Wholesale Mortgage. This is really good for the stock because not only does it represent that it's actually United Wholesale Mortgage, but it also brings in a lot of different types of investors that are just believing in the company. Whether it's retail investors or largely institutional investors, that will bring up the share price immensely because we'll actually see the value of the stock come out. Now that we've gotten through a lot of the boring things that come with a merging company, we can start to look into the actual company of United Wholesale Mortgage itself and why I personally believe that you should be investing into this company. Okay. First, we'll begin by looking at the budget sheet and the earnings reports from 2019 and 2020 in quarter three of both of those years. In 2019, they had a total net income of $197 million. Okay, $197 million in 2019, which is nothing to scoff at all. It's a very, very high number, very good sales for a wholesale mortgage company, sorry. Now, if we look at 2020, the profit margin and the difference between the 2 years is something that is almost unheard of, with over $1.4 billion in net income compared to 2019's $200 million in net income. That is over a 700% increase between 2019 and 2020. That in and of itself has given them the label of the number one wholesale mortgage lender worldwide, which is a very large feat for them to have. Now, while the earnings report is close to unheard of and a big reason why I'm investing into the company, it's not the biggest reason why I'm investing into them. One of the biggest things that I look at in the companies that I am investing into is the ownership, leadership, and the overall management team. Now, with Matt Ishbia leading them as the CEO of the company, it's important that I know and understand what Matt Ishbia is like. One of the biggest things that I like about the guy is that he actually played basketball as a walk-on for Michigan State University. Now, as you guys may know, Michigan State University is no small school. It takes a lot of hard work and dedication and work ethic in order to get on the team, but let alone get on the team as a walk-on. Now, that in and of itself has set him up to be a very successful, hardworking man, coming from a large line of businessmen, and his father was a businessman. And basically what Matt Ishbia has been able to do over the past 7 years of being the CEO, he has created a massive company with only 12 employees being a part of the company back when Matt Ishbia first joined the team, to now him leading it to over 7,000 employees in just 8 years. Since he became the CEO in 2013, as you can see right here, and he has grown the company to over 7,000 employees which is something that is very, very crazy and a huge accomplishment for the guy himself. And I do not see that dying down anytime soon. One of the biggest things that I also like about the company is that when they win, all their employees win, which builds a very, very good community in the employees that they have, because essentially this last year they had obviously one of the best years that they've ever had. And with that, they gave back to their community with millions upon millions of bonuses, whether it was vacations or new cars or just cash bonuses to their employees that have been working extremely hard. That in and of itself is how you create a very successful company, and a company where the employees are actually working to better themselves and better the company that they are working for. Now, while this company may not be in the biggest sectors in the world like EV or even fintech that's blowing up right now, it is a very, very valuable play. Now, I might have gone over and skipped a little bit about the details of what the company is, but it's essentially a wholesale mortgage company. And what that means is wholesale mortgage, it basically underwrites loans for mortgage brokers, banks, and credit unions. Okay, it doesn't lend directly to borrowers. Instead, borrowers mainly deal with the company's loan servicing department. Okay, and what I did is I actually went through on their website, which is what is up right now. I know that my camera is covering it a little bit, but what I did is I went through the process of starting a loan just to see how valuable it was and how easy it was and how manageable the website was, and just their overall business plan and how it would affect me if I was going to be a consumer or a customer essentially of them. And what I found is that it was very, very easy for me. It was very simple to follow. It was very easy to kind of get my name in there, get a response back. Now I didn't obviously follow all the way through because I don't need a mortgage, but it was a very simple process. And I think that that's very, very important to look at when looking through a company, is become a consumer, become a customer for once, and see what it's like and what it looks like to kind of be a customer of that company. So I went through and did that, and it was a very simple process. It was very easy, felt good. I got very good responses. The people were very nice. So that in of itself is a very big reason also why I'm investing in the company. But before I went any further, I kind of did want to explain what the idea of wholesale mortgage was and what they did. Now, like I said, it may be a boring sector, I get it, but to me, this is a value play. The company right now, as it stands at $12.50 per share, is extremely and immensely undervalued. That to me alone says buy, right? With $1.4 billion in net income in 2020 compared to $200 million in 2019, that gives me a 700% margin from year to year, which gives me a lot of confidence in essentially investing in that company, right? Now, obviously, there's downsides and everything like that. They might not make $1.4 billion this year, or they might double their revenue, or they might 700% it again, right? They've already created this name for themselves to be the number one wholesale mortgage company in the world, right? And that in and of itself makes them acquire and gain a lot of customers and consumers to basically work with them in developing their loans. Now that we have a good understanding of what the company values brings, as well as the ownership and management team brings, we're going to dig a little bit into the technical analysis of the stock. Now, while I myself am not one of the best technical analysts out there, I do have a lot of good friends that are very, very good and established and well known for their technical analysis. Okay, so basically, the reasoning why I'm going over this is to explain to you why this is a good buy right now or as soon as market opens. Okay, on the 4 hour, we can see that there is a reversed head and shoulders, inverse head and shoulders. Okay, with this being the head and these two being the shoulders, which is usually a very telling sign of a change in momentum or an uptrend. Okay, on top of that, there's also a dragonfly doji, which essentially means that the sellers could not push it any lower than that. It's another very bullish sign, which means that the stock price will go up. Okay, the reason why I'm telling you these things is because in Give, we've actually been seeing a small downtrend happening, and I believe that the reasoning for that is because we had calls expiring today, which is on 1/15 when I'm recording this, January 15th, and all of those expired today, which means this was getting held down by shorts a lot. In fact, the ratio, the short volume ratio was almost over 0.35, which is almost a 40% short ratio, which is absolutely crazy. And a good reason why the stock was getting held down for so long. So the reason why I'm going through this and telling you guys these couple of bearish signs is to explain to you guys that momentum change is very, very due, especially with the merger being around the corner on the 20th. Okay. Now, again, I am not a financial advisor, and I do want you guys to do your own due diligence. Okay. I know I've explained a lot in this company, a lot about the stock, but this is not where everything comes from, right? I want you guys to do your own due diligence. Make sure that you guys have a good understanding of the company before you guys put your money where my mouth is, okay? I want you guys to have an understanding of the company. If you guys made it to the end of the video, I just want to say thank you guys so much for watching it all the way through. I understand this is my first video, and I understand that I probably said a lot of the same things over and over again, and maybe my presentation wasn't the best, but I promise you guys I will be getting better at it. If you guys did like the content that was in this video, as well as all the research and due diligence that I did, feel free to leave a like on the video, as well as drop a sub. Again, this is Drew with Invest Together, and I'm out. Peace.